Trading was hard until I found this easy fair value gap strategy that now makes me over $1,000 a day. In this video, I'm gonna show you how you can start using it in the markets to make consistent profits every single day. And I'm going to teach you everything in just 3 simple steps. But before I do that, here's some context. My name is Edriel Cash and I've been trading for over 4 years now. I've been trading profitably for 2 years. Naturally, I had to go through some pain before turning profitable. I was losing in these markets for 2 years. I was completely lost. I had no discipline, no guidance, and I was working in a fast food restaurant for $9 an hour. And on top of that, I was always taught some BS by these fake gurus online. Then I found this easy fair value gap strategy that turned me profitable. It's very simple, very minimal, easy to use, happens every single day, and it is very efficient and obviously profitable. I wish that I would have seen this video back when I was unprofitable, because it would have saved me time and money. But now you can skip the process and I'll teach it to you. So with that being said, let's get into the video. Step number 1. What are these so-called fair value gaps? Fair value gaps are price imbalances in the markets that these institutions, hedge funds, and big banks are using to manipulate the market and obviously enter from. And obviously, when do they appear? When we go into the markets, we have to seek for 3 candle sequence where the middle candle is the gap. It's an imbalance in the markets. This gap right here between the first and third candle wicks is the fair value gap, right? And what we want to see is this being created. We're gonna mark it out, and when we're in an uptrend, we want for the price to retrace to it, tap into it, and then see reaction to the upside, and then we can buy from here. Since let's say if this would be an uptrend, these fair value gaps tend to act like a magnet. The magnet, fair value gap, tends to pull the price right here, and once this gets tapped into, it will continue this uptrend and we're gonna look for buys. And these fair value gaps are most efficient in a market trend. But obviously you may wonder, like, what is a market trend? Well, let me teach you. A market trend is literally, quite frankly, the lifeblood of the market. It is how these markets are built. Okay, there's the uptrend, downtrend, and obviously there's the consolidation. But consolidation is just sideways movement. When there's no volume, it moves like this. Okay, this is consolidation. We don't want to see this. What we want to see is a downtrending price action. Here we have to look for sales, and right here, as you can see, this is an uptrend price action. And the way you can spot this trend is very, very simple and minimal. The uptrend always moves like this. It moves in higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs, right? It is very consistent, minimal, but this is so easy to spot in the markets. This is exactly when you need to look for buys, okay? Because the uptrend always moves consistently, the downtrend moves consistently. They will continue to move in a trend until there's a volume change. And this is how the downtrend moves. It moves in lower lows, lower highs, low lows, lower highs, low lows, lower highs, low lows, low highs, low lows, right? It moves consistently, just like the uptrend. They look very similar, and they are. When the market trends up, you need to look for buys. When the market trends down, you need to look for sells. And what you need to understand about these trends, they are built by impulse and retracement movement. The bigger move of the trend is called an impulse. When it moves like this, it moves up in an uptrend, right? The smaller move is called a retracement. It's when the price fixes itself. It moves consistently like this. Impulse, retracement, impulse, retracement, impulse. Same in downtrend. Impulse when it moves a lot down in a downtrend, and when it moves a little bit up to fix the price, this is the retracement right here. Impulse, retracement, impulse, retracement, impulse, retracement, impulse, aka low lows, lower highs, low lows, lower highs, and low lows, low highs, low lows, low highs, low lows, right? And the reason why these fair value gaps are so powerful to look in an uptrend or downtrend is because you can just wait for the price to retrace to the fair value gap, and then you're gonna continue with the original trend. So let's say we're currently in an uptrend. How does the trend move in uptrend? It moves in higher highs, higher lows, higher highs. If it creates like a huge gap in the market, what we want to see is the third candle confirmation that it is a fair value gap. Remember, in a fair value gap, we need the 3 candle sequence. And let's say these are the wicks. This is the first candle's wick, and this is the third candle's wick. So what we need to mark is the middle part above this wick and below the third candle's wick, above the first candle's wick and below the third candle's wick. This is the gap right here, FVJ, right? Want to see this getting tapped into now, since we're in an uptrend, like this. Tap into, since it also acts like a magnet in the trend, pulls the price. There's a lot of orders in here that these big banks, institutions, and hedge funds want to take out, and boom, once this gets out, a lot of people are entering shorts in here. They think that the price will switch its direction, aka that is called a manipulation by smart money. But what we want to see is a reaction off of the fair value gap to the upside, since we're currently in an uptrend. So a lot of retail traders, like, you know, this supply and demand, all these people probably shorted right here. So they are getting liquidated now because the market will continue up, most likely, if we see the reaction over here, okay? And when we see the reaction, we can start looking for buys, right? Very simple, minimal, easy to use, and makes me a lot of money. But obviously, now you may be like, okay, this is a nice way to find these fair value gaps, but this doesn't tell a lot. How can we actually use these fair value gaps in the market? Well, let's do some back testing. Look at this uptrend right here. How does it move? Uptrend, higher highs, higher lows, 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 higher highs. You get the point, okay? This is a very consistent movement to the upside. And right here in the markets, I can see a bunch of fair value gaps that got respected. Look at this. As you can see, this used to be a downtrend right here. It moved in lower lows, lower highs, low lows, lower highs, low lows. But then it broke structure right here, because this is an up candle that closed above this lower high, right? By the way, quick tip, this is exactly how you spot the market structure shift. So right now, this is an uptrend in this current time frame. Why? Because it created our higher highs closing above this lower high, right? So now we start to create our higher highs, higher lows. And if you look closely, a lot of the people probably got liquidated right here. A lot of the retail traders started to look for trends to the downside right here, thinking that the price will magically go down. But what it actually did, manipulated the price, taking out these two fair value gaps. As you can see, what is this? This is a 3 candle sequence right here. This is the first candle, up candle, second candle, third candle. As you can see, middle here, there is a fair value gap. And since this is a 4-hour time frame, it has a lot of power and influence, right? And look at this as well in here. Took out this as well. This is the first candle's up wick. We're gonna start the fair value gap from here, and this second candle is the actual gap, and the third candle's down wick is where we're gonna end the fair value gap. As you can see, it goes a little bit up and continues to take out even more fair value gaps, faking out more people out from the markets. Now look at this. What is this? This is a huge fair value gap right here, because this is the first candle. This is the first candle's up wick. I'm gonna start it from there, the fair value gap. This is the third candle's down wick. We're gonna put it right there, and this is the fair value gap, right? The huge fair value gap. We want this to get tapped into, but as you can see, it didn't get tapped into. But now we have this second fair value gap right here. This is the first candle's wick, up wick. Start from there, and this is the third candle's down wick. I'm gonna put it right there, and this is the fair value gap itself. Let's see, does it get tapped into? Okay, that also doesn't get tapped into, but let's see. Okay, oh, now we go. There we go. Now we got tapped into. As you can see, a lot of people probably just short the markets, thinking that the price will start to trend down. But no, most likely, if we see the reaction from here, I'm gonna go to the 5-minute time frame. What I want to see after 5-minute time frame always is something called a break of structure to the upside after a fair value gap gets tapped into. I'll go to the 5-minute time frame. I'm gonna show you how does the break of structure happen. Look at this. If we go right here, what we want to see is a break of structure. We want to see a high that gets broken above by an up candle. Let's see, does it happen? Okay, it doesn't yet. As you can see, we actually, oh, there we go. We actually create this new high. As you can see, this is the most recent high that we had so far. Why is it a high? Because a high is always created by 2 candles. Look at this, an up candle followed by a down candle. And as you can see, this up candle breaks above this most recent high. That is called a break of structure to the upside. A down candle is created by 2 candles. Let me quickly show you how you can spot these highs and lows, because I want everybody to understand that, so there's no misunderstanding, okay? So a high is always being created by an up candle that is immediately followed by a down candle, right? And a low is always started by a down candle followed by an up candle. This has to happen simultaneously, okay? This is the low, right? Like this is the low, and this is the high, okay? Up candle followed by down candle. This is the high. Down candle followed by an up candle. This is the low. And as you can see, what do we have here? This is the high. And when we want to see the break of structure, we want to see the most recent high. That's what has the power. This is already gone because, I mean, this is still a high, but this is not the most recent one. We want to see the most recent one getting broken above by an up candle, right? And now that it broke structure to the upside, we're officially bullish in this 5-minute time frame. Obviously, we're bullish in the higher time frames, 4-hour time frame, etc. That's why I'm looking for buys. But now we're officially bullish in this time frame because we broke above the high. Okay, so this is a break of structure. Now naturally we'll start to create our higher highs, higher lows, etc. Most likely, okay, especially when we're bullish in the higher time frames, right? I would put the stop loss below the most recent low right here. Why is this a low? First of all, because this is a down candle that is then followed by an up candle. Look at this. This is the low right here. I'll put the stop loss right there, right? And we'll target this one. See, these are some highs, but I'm gonna target this one since this is a strong uptrend. Remember, we're in a very nice uptrend in the 4-hour time frame, and these areas getting respected. So I'm gonna buy right there. Let's see what happens. Okay, as you can see, taking some time, but it happens sometimes. But this is what I would have taken. This is a nice trade. As you can see, slowly making its way up, continuing the uptrend. Yeah, taking some time, but it happens, right? There we go. There we go. This is exactly what I want to see. We got the 4-hour time frame fair value gap getting tapped into, respected, and 5-minute breakout shocks to the upside. That's all you need, bro. That's all you need to follow the trend with a fair value gap. All right, look at this. We actually continue this option right here, and then we kind of switch the trend a little bit. Right now, this is a bearish trend. However, I just for fun wanted to see what would happen if this huge fair value gap that also could act like a magnet in the trend. I want to see, does it get respected? So in this scenario, since this is a huge fair value gap, this has a lot of orders that these big banks, institutions, and hedge funds want to take out. Now that this got taken out, in this scenario, in the real markets, I would go right here. Since it's got tapped into, I would go to the 5-minute again, and then I would want to see the breakout structure. Then I would enter. If it happens, I'm gonna take it. Want to see the most recent high. What is this? Now we just created our most recent high because this is an up candle followed by a down candle. So I want to see an up candle close above that. Doesn't do that yet. Okay, we'll create our new high. Why? Because this is an up candle followed by a down candle. So this is the most recent high. Now we broke structure above it. Look at this. Up candle closes above the high. This is a break of structure to the upside, and I'll put the stop loss below the most recent low. Right here, this is a down candle followed by an up candle. Right here, I'll put the stop loss, and I'll take it right here on the breakout structure. And where would I target? This may look like I'm going against the trend, but it's the thing, guys. What we want to traders want to see is either a fair value gap or whatever, like liquidity, something getting tapped into and getting respected. Because these areas, like liquidity, fair value gaps, etc., order blocks, they are areas that could switch the price direction because they have orders that literally these big banks, the market movers, want to take out. Okay, and if they get respected, that means the big banks, institutions, and hedge funds, they're satisfied. They took out massive orders, liquidated a bunch of people out from the markets, and now, since it got respected, we broke structure the lower time frame again. After that, I will now look for buys. I will target. I mean, since this is there's a lot of shit that we could potentially target. I'm gonna target big time. Okay, so because there's a lot of liquidity above here as well, so we could take this huge trade right here. Let's see what happens. Yeah, this takes some time, but this is what I want to see as traders. We want to take the high quality trades that make us a lot of money. And there we go, big ass trade, 1-to-6 return ratio, 4-hour time frame fair value gap getting tapped into, respected. That's one to see. How do we know the respect? Because I mean, it got tapped into, immediately starts to go up. And how do we confirm that the trend will switch? We got the respect, we got the 5-minute breakout structure, stop loss below this low, and targets big time since this is a trend switch. That's how you make a fuck ton of money in trading. Literally 1 week ago, I had my biggest day because I'm constantly scaling up now. I start to scale up in trading. $3,000 in single trade. Just because I use this simplified ass strategy. What we need to first of all understand is the most important thing in the markets. Trends. Lifeblood of market. That's the trend. Okay? Then we can use these areas like fair value gaps or some liquidity, order blocks, etc. as our tools to get tapped into. Once those get tapped into, we want to see reaction off of that. If we get the reaction, we're gonna just buy. Follow the trend that we created. Amazing. And that is exactly how I make money. That is exactly how I've been profitable for over 2 years, being consistent, changing lives, changing my students' life. And if you made it this far, you just proved me that you're serious about your life, about your goals, you're ambitious, you don't want to work for a fucking boss who tells you what to do. And because of that, I'm thankful and I want to give you something. I want to give you a gift. Click the first link in the description. It will take you to my free Discord, and also below that there's also my free ebook that you can get completely for free. And comment down below what you think, subscribe, and as usual I will see you on the other side. Peace out.